Before we begin, please note that this presentation is for informational purposes only. I am not a licensed financial advisor or insurance agent. The information provided in this video is not intended as financial or legal advice. You should consult with a qualified professional for advice tailored to your individual situation. Experian and the Experian trademarks used herein are trademarks or registered trademarks of Experian and its affiliates. The use of any other trade name, copyright, or trademark is for identification and reference purposes only, and does not imply any association with the copyright or trademark holder of their product or brand. You know that feeling? That envelope shows up in mail, or that email hits your inbox. It's from your car insurance company. You open it and your eyes scan right to the number, and your stomach just sinks a little. It went up. Again. For no reason. You didn't get a ticket, you didn't have an accident, but that number just keeps climbing twice a year like clockwork. You pay it because what choice do you have? It feels like you're just setting money on fire, funding a system you don't understand and can't control. What if I told you that feeling of helplessness is exactly what the insurance industry is counting on? What if I told you that your loyalty to your current insurance provider is likely costing you hundreds, maybe even over $1,000 every single year? This isn't an exaggeration. It's a business model. It's called the loyalty penalty, and it's one of the dirtiest little secrets in the insurance world. They reel you in with a decent introductory rate, and then, slowly, methodically, they crank it up, betting that you're too busy, too confused by the jargon, or too intimidated by the hassle of shopping around to do anything about it. They're betting on your inertia, and for millions of Americans, it's a winning bet. But today, that bet is off. Today, we're going to arm you with a powerful tool that levels the playing field. In this video, I am going to pull back the curtain on the Experian auto insurance comparison tool. We are going to do a deep dive and show you step by step how this completely free service can save you from the loyalty penalty and put that hard-earned money back in your pocket, where it belongs. We're going to demystify the entire process. You will learn how to get dozens of real, competitive quotes from major, name-brand insurance carriers in the time it takes to drink a cup of coffee. You will finally understand the key factors that actually impact your rates. And by the end of this, you will have a bulletproof strategy to ensure you are never, ever overpaying for car insurance again. This isn't just about saving a few bucks. It's about taking back control of one of your biggest recurring expenses. Now you might be thinking, Experian? Don't they do credit scores? And you're absolutely right. That's the secret sauce. That's what makes this tool a game changer. Think about it. Who knows your financial profile better than one of the major credit bureaus? Unlike the dozens of other comparison sites out there that are basically just lead generation forms, designed to capture your info and sell it to a bunch of hungry agents who will then spam your phone for the next 6 weeks, Experian's approach is fundamentally different. They aren't an insurance company. They're a data and technology company. Their goal isn't to sell you one specific policy. Their goal is to leverage the data you already trust them with to make your life easier and save you money. When you use the Experian tool, it can securely and instantly pre-fill a huge chunk of the application for you. Your name, your address, your vehicle information, it pulls it in seamlessly. This is huge, because what's the number one reason people don't shop for insurance? It's the soul-crushing hassle of filling out the same information over and over and over again on 10 different websites, each one asking slightly different questions in slightly different ways. It's designed to be exhausting. Experian cuts through all of that. They've streamlined the friction points, turning a process that used to take an entire afternoon into something you can do during a commercial break. Let's address the skepticism head-on because I know you're thinking it. First, is it really free? Yes, 100%. There are no hidden fees, no charges, no bait and switch. Experian makes money on the back end from the insurance partners on their platform if you decide to buy a policy. Costs you, the consumer, absolutely nothing. Second, will I get spammed? This is a big one, and the answer is no, because you are in control. The tool presents you with quotes. You see the companies, you see the prices. If you want to proceed with one, you click to finalize it. You are not broadcasting your information into the void for every agent in a 50-mile radius to attack. It's a closed, secure ecosystem. Third, are these real quotes or just ballpark estimates? They are real bindable quotes. These are not vague guesses. Based on the information you provide and verify, these are the rates the insurance companies are offering you right then and there. Let's paint a picture of the old way versus the new way. The old way. You decide you've had enough of your premium hikes. You block off a Saturday afternoon. You pull up a search engine and type in car insurance. You click on the first 5 links. Each one takes you to a different carrier's website. You start filling out the first form. Name, address, date of birth. Then your car. The VIN number. Where's the VIN? You have to go out to the garage, find it on the dashboard, and type it in. Annual mileage? You guess. Primary use? Commuting. Safety features? You try to remember if you have anti-lock brakes. Then you add another driver, your spouse. You do their whole profile. 20 minutes later, you hit Get Quote, and it tells you to call an agent. You sigh. You move to the next website and start the entire agonizing process over again. 2 hours later, you have 3 quotes, your brain is numb, and you just give up and stick with what you have. The insurance company wins. Now the new way, the Experian way. You log into your free Experian account. You navigate to the auto insurance section. A lot of your information is already there. You confirm your car, you verify your driving history with a few clicks, and you answer a couple of simple questions about coverage levels, which we'll break down later so you know exactly what to choose. You click one button. The platform then securely sends your anonymized data out to its network of over 40 top-tier insurance carriers. We're talking about the big names you know and trust. Within about 3 to 5 minutes, the results start populating. Not one quote, not 3, but a whole list. 10, 15, maybe more. All neatly organized side by side, so you can compare apples to apples. You can see right there in black and white. Your current provider is charging you $2,000 a year. Here's Progressive, offering the exact same coverage for $1,400. Here's Nationwide for $1,350. Here's Travelers for $1,200. The choice is suddenly crystal clear. The power is back in your hands. This is more than just a piece of technology. It's a fundamental shift in the power dynamic between you and the insurance industry. For decades, they've held all the cards. They had the pricing algorithms, the data, and they relied on an opaque and confusing system to keep you locked in. Tools like this blow the doors wide open. It introduces transparency and competition into a market that has desperately needed it. When insurance companies have to compete for your business in a side-by-side marketplace, you win. Prices go down. It's that simple. So what we're going to do now is go on this journey together. I'm going to share my screen and we will walk through the entire process live. We'll use a real-world driver profile so you can see exactly how it works, what questions are asked, and what the results look like. Then we're going to analyze those results. I'll show you how to read the quotes, how to understand the different coverage options like liability, collision, and comprehensive, and how to choose the right levels for your specific situation. I'll also share some pro tips for maximizing your savings, little-known discounts and tweaks you can make that can have a huge impact on your final premium. By the time we're done, you will be an expert. You won't just know how to use a tool. You'll have a completely new, empowered mindset about how you manage one of your most significant household expenses. Let's dive in. So let's start by confronting a hard truth. For decades, the way we've shopped for car insurance has been fundamentally broken. It's a system designed not for your convenience, but for the convenience of the insurance companies. Think about it. What was the old way? You'd spend a Saturday afternoon on the phone, calling agent after agent, repeating the same information over and over again. Your name, your address, your date of birth, the make, model, and year of your car, the VIN. It's a monotonous, soul-crushing cycle. Or maybe you went online. You'd land on a carrier's website, fill out a 20-page questionnaire, only to get a single quote. 1. To get another, you'd have to go to a competitor's site and do the entire song and dance all over again. The worst part? That nagging feeling in the back of your mind. Am I really getting a good deal? Is this quote from Company A for the exact same coverage as the quote from Company B? Am I comparing apples to apples, or am I comparing a rock-solid policy to one that's full of holes? You're left trying to decipher insurance jargon, comparing liability limits and deductible amounts, feeling more like you need a law degree than a driver's license just to make an informed choice. You're being sold to, not served. You're a lead in a funnel, not a person looking for protection. And here's the kicker, the dirty little secret of the insurance world. Loyalty is often penalized, not rewarded. You stick with the same company for 5, 10, even 15 years thinking you're a valued customer. But behind the scenes, a practice known as price optimization can kick in. Insurers might figure that because you haven't shopped around, you're unlikely to leave, so they can slowly, incrementally, raise your rates year after year, far beyond what a new customer would pay for the exact same policy. You're paying a loyalty tax and you probably don't even know it. This entire system creates friction, confusion, and doubt. It's designed to make shopping around so difficult that you just give up and accept your renewal offer. It's a system that thrives on your inertia. This is where the paradigm shift happens. The very existence of a tool like Experian isn't just about offering a slightly more convenient way to do the same old thing. It's about fundamentally changing the power dynamic. It's about flipping the script. Instead of you chasing down a dozen different companies, this tool makes those companies compete for your business on your terms in a single transparent marketplace. It takes the control out of their hands and puts it squarely back into yours. This is the core philosophy. It's not just a comparison website. It's a consumer empowerment engine. Now, you might be asking a very fair question. Wait a minute. Experian, the credit bureau, what do they have to do with car insurance? It's a brilliant question, and the answer gets to the very heart of why this tool is so effective. For years, Experian's entire business has been about helping people understand and take control of their financial lives through data. Your credit report is one of the most important financial tools you have. It affects your ability to get a mortgage, a car loan, or a credit card. Experian provides the tools to see that data, understand it, and improve it. They saw that auto insurance was another massive piece of the average American's financial puzzle. It's one of the biggest recurring expenses for most households, right up there with housing and food. Yet, it was operating in this opaque, confusing, anti-consumer way we just talked about. So, for them, it was a natural extension of their mission. If they can bring transparency and control to the world of credit, why not bring that same power to the world of insurance? They realized they were uniquely positioned to solve the biggest frustrations in the process. They already have expertise in handling sensitive data securely and building powerful platforms that make complex information simple to understand. They saw a broken system and knew they had the technology, the data expertise, and the trust to fix it. This isn't a side project for them. It's a direct application of their core purpose, using data to create a better financial future for you. So how does it actually work? What's the magic behind the curtain that makes this possible? It boils down to a few key innovations that systematically dismantle the old, frustrating process. First, let's talk about the single biggest time waster: filling out forms. Experian tackles this with the power of pre-fill. If you're an Experian member, the system can securely and with your permission use the information you already have on file, your name, address, and even vehicle details, to populate most of the application for you. Think about the sheer relief of that. Instead of spending 15 minutes typing in your life story on every single website, you verify your information once. It respects your time. It eliminates the friction that makes most people give up before they even start. Second, this isn't just a simple web scraper. It's a deeply integrated data engine. Experian has built direct connections with a massive network of over 40 top national and regional insurance carriers. When you submit your information, the tool doesn't just go out and look at public websites. It sends your data directly into the quoting systems of these partner companies, all at once. In a matter of seconds, it's doing the work that would have taken you an entire day of phone calls and web forms. It's a simultaneous, multi-threaded conversation with the entire insurance market, happening on your behalf. It's leveraging technology to do the heavy lifting so you can focus on the single thing that matters, the choice. And this leads to the most crucial part: a true apples-to-apples comparison. The tool works to standardize the results. It requests quotes for the same levels of coverage from every carrier, so when you see that list of prices, you can be confident that you're looking at a fair fight. You'll see a quote from Progressive, from Allstate, from Nationwide, and dozens of others all lined up for the same bodily injury liability, the same collision deductible, the same uninsured motorist coverage. The fog of confusion lifts. For the first time, you can clearly see who is offering the most competitive price for the exact protection you and your family need. You're no longer guessing if a cheaper price means you're getting a weaker policy. You know. Finally, and this might be the most important feature for your peace of mind, it puts a shield between you and the chaos. You know that fear? That if you put your phone number into one of those get a free quote sites, your phone will start ringing off the hook for the next 6 months with calls from aggressive agents? That doesn't happen here. You are in a protected environment. You get the quotes, you see the numbers, you review the options. No one gets your contact information until you decide you're interested in a specific quote, and you choose to move forward. You are the one who initiates the contact. The power to start the conversation is yours and yours alone. No pressure, no harassment, just clarity and control. So we've uncovered the broken old system and the powerful new philosophy behind the solution. We see why it works, But what does it actually look like to use it? In the next part, we're going to pull back the curtain. I'm going to take you through the entire process click by click, from the very first screen to a full page of real actionable quotes. You'll see just how simple and frankly how satisfying it is to finally be in the driver's seat of your own insurance decisions. Alright, let's pull back the curtain. The first thing you'll likely do is log in with your Experian account. If you don't have one, creating one is fast, and it's the key that unlocks the entire system. Now this is the first moment you'll feel that little spark of magic. Because this is Experian, they already know some of the basics. You're not starting from a completely blank slate like you would on some random insurance website that feels like it was designed in 1998. The system can pre-populate your name, your address, and other foundational details, saving you from the tedious task of typing in information you've typed 1,000 times before. This isn't just about convenience, it's about accuracy. A typo in your address or name can lead to incorrect quotes or a dead end. By confirming the information Experian already has on file, you're starting the process on a rock-solid, error-free foundation. Once you're in, the journey truly begins. The dashboard is clean, it's intuitive, and it's designed to guide you, not confuse you. The first major step is telling the system about what you drive. You'll see a prompt to add a vehicle. This is where you might be expecting a long, drop-down menu nightmare, trying to remember if your car is the LX, the EX, or the EXL V6 with the optional moonroof package from 2017. Forget all that. The smartest, fastest way to do this is by using your vehicle identification number, or VIN. You can find it on your current insurance card, your vehicle registration, or right there on the driver's side dashboard, visible through the windshield. You pop that 17-digit code into the box and bam, the system instantly knows your car. Not just that it's a Toyota Camry, but the exact year, make, model, trim level, engine size, and even the factory-installed safety features. This is unbelievably important. Why? Because insurance companies base your rate on risk, and the specific details of your vehicle are a huge piece of that puzzle. A car with anti-lock brakes, side curtain airbags, and an anti-theft system is a lower risk than a base model without those features. If you were filling this out from memory, you might forget to include those details and miss out on discounts you rightfully deserve. Using the VIN eliminates the guesswork and ensures you get credit for every single safety and anti-theft feature your car has, maximizing your potential for a lower rate right from the get-go. Of course, if you don't have your VIN handy, you can still add your vehicle manually. The tool guides you through it, year, make, model, and so on. After the basics, it'll ask a few simple questions about the vehicle's use. Is it primarily for commuting to work or school? How many miles do you drive a year? Be honest here. Some people think lowballing their mileage will save them a fortune, but if you have to make a claim and the odometer shows a massive discrepancy, it could cause serious problems. The tool will also ask if you own, finance, or lease the vehicle. This matters because if you have a loan or a lease, your lender almost certainly requires you to carry not just liability, but also comprehensive and collision coverage to protect their investment. Next up, the drivers. The system will start with you, the primary user, likely pulling your name and date of birth from your Experian profile. It'll ask you to confirm a few details: your marital status, your education level, your occupation. Now you might be thinking, what does my job have to do with my car insurance? And the answer is potentially a lot. Insurance is a game of statistics. And statistically, certain professions have lower claim rates. Teachers, engineers, scientists, nurses, first responders, these are often seen as more risk-averse professions, and many carriers offer specific discounts for them. You could be leaving a 5 to 15% discount on the table just by not selecting the right occupation. The Experian tool makes sure you don't miss this. It'll also ask about your driving history. Have you had any accidents or tickets in the last 3 to 5 years? Again, honesty is crucial. The insurance companies are going to run your driving record anyway. Being upfront ensures the quotes you see are the quotes you'll actually get. What if you're not the only one driving? Adding another driver is just as simple. A spouse, a partner, or even that new teenage driver in your house. You'll enter their information just as you did for yourself. For the teen, it'll ask about their GPA. Why? Because the Good Student Discount is one of the most significant discounts available for young drivers. If your son or daughter has a B average or better, it can literally save you hundreds, sometimes even over $1,000 a year. It's the insurance company's way of rewarding responsible behavior, assuming that a good student is likely a more cautious driver. The tool makes sure to ask for this so you don't forget to cash in on those good grades. So now Experian knows about your cars and your drivers. The profile is built. The next screen is, without a doubt, the most important one in the entire process. It's where you choose your coverage. This is where most people's eyes glaze over. They see terms like bodily injury liability, uninsured motorist, and PIP, and they just click whatever is cheapest or what they had last time, without really understanding what it means. This is a massive mistake. And it's where the Experian tool truly shines by making it simple. It presents your coverage options in a clear, visual way. Let's break down the big three. First, you have liability coverage. This is the one that's legally required in almost every state. It doesn't cover your car or your injuries. It covers the damage you might cause to other people and their property. It's usually shown as 3 numbers, like 50/100/50. That means the policy would pay up to $50,000 for bodily injury to one person, up to $100,000 total for bodily injury per accident, and up to $50,000 for property damage. The Experian tool will show you your state's minimum requirement, but it will also clearly show you more recommended, safer levels of coverage. Choosing the state minimum is one of the riskiest financial decisions you can make. Imagine you cause an accident that totals a $60,000 SUV and sends the driver to the hospital. If your property damage limit is only $25,000, guess who's getting sued for the other $35,000? You are. The tool lets you easily slide that coverage up and see what a real safety net looks like. Next, you have collision and comprehensive. This is the coverage that protects your car. Collision pays to repair or replace your car if you hit something. Another car, a pole, a guardrail. Comprehensive covers almost everything else. Theft, vandalism, a tree falling on your car, hitting a deer, hail damage, a cracked windshield. If you have a loan or lease, you're required to have these. If you own your car outright, it's optional. But ask yourself this. If you woke up tomorrow and your car was gone, could you afford to replace it out of pocket? If the answer is no, you need collision and comprehensive. For both of these, you'll choose a deductible. That's the amount you pay out of pocket before the insurance kicks in. A higher deductible, like $1,000, means a lower monthly premium. A lower deductible, like $500, means a higher premium. The Experian tool lets you toggle between these options, so you can instantly see the price difference and find the balance between monthly cost and out-of-pocket risk that you're comfortable with. The tool will also present other important coverages like uninsured or underinsured motorist protection, which is critical. It protects you if you're hit by someone with no insurance or not enough insurance. There's also medical payments or personal injury protection, which covers medical bills for you and your passengers regardless of who's at fault. Each option is explained in plain English. No jargon, no confusion. You're not just checking boxes, you're building a shield of financial protection, piece by piece, fully understanding what each component does. You've now entered your vehicle and driver details with precision. You've navigated the complexities of coverage and tailored a policy that perfectly fits your needs and your risk tolerance. Every piece of the puzzle is in place. All that's left is to press one button. Compare quotes. You're on the edge of the big reveal, the moment of truth where all this careful preparation pays off. And then you click. In that split second, a cascade of digital handshakes begins. Experian's platform isn't just pulling a few numbers from a dusty database. It's sending out a signal, a highly specific, encrypted request to a vast network of America's top insurance carriers. From the household names you see on TV every night to the specialized insurers you've never even heard of. It's like having a team of 100 expert insurance brokers, all working exclusively for you, at the speed of light. They're taking the exact profile you just built, your car, your driving history, and the precise coverage levels you demanded, and asking each carrier a single powerful question. What is the absolute best price you can offer this person right now? What used to take a full weekend of frustrating phone calls, of being put on hold, of repeating your VIN number until you were blue in the face now happens in the time it takes for your browser to refresh. And then it appears. The results page. It's not just a list, it's a command center. It's a panoramic view of your options, laid out with breathtaking clarity. Your screen is suddenly filled with the familiar logos of trusted insurance companies, each one aligned next to a number. A big, bold, beautiful number. The annual premium. This is the moment of truth. For the first time, you're not just seeing one company's opinion of what you should pay. You're seeing the entire market compete for your business in real time. The first thing you'll probably notice is the range. You might see a quote that's shockingly close to what you're paying now. You might see a few that are even higher. But then you'll see it. The one that makes you lean in closer to the screen. The one that's 20, 30, maybe even 40% lower than your current rate. It's not a typo. It's not a gimmick. It's the power of true comparison. And this is where Experian's genius truly shines. Every single quote you see on this page is an apples-to-apples comparison. That painstaking work you did in the last step, selecting your liability limits, your deductibles for collision and comprehensive, that's the blueprint. Every carrier has been forced to quote you on the exact same terms. There's no ambiguity. Progressive isn't quoting you on a policy with a $2,000 deductible, while Geico quotes you on one with a $500 deductible. Everyone is playing on the same level field using your rules. It's like walking into a grocery store and every single product, regardless of brand, is required to display its price per ounce in giant letters. The confusion is stripped away, leaving only pure, unadulterated choice. Now let's go beyond that initial price tag. The lowest number is tempting, a siren song for your wallet. But a smart decision requires more than just a glance. Click on any one of those quotes. This is where you drill down into the DNA of the policy. The first thing you'll see is a detailed breakdown, confirming every coverage you selected. There's your 100/300/50 bodily injury and property damage liability. There's your $500 collision deductible. It's all there, a perfect mirror of your request. This isn't an estimate, it's a concrete offer. But scroll down further. This is where the magic happens. You'll see a section called Discounts Applied. Experian's system doesn't just ask for quotes. It actively hunts for savings on your behalf. Based on the information you provided, it automatically identifies and applies every discount you're eligible for. The good driver discount? Applied. The multi-policy discount because you indicated you own a home? Factored in. The discount for having anti-lock brakes or a passive alarm system in your 2021 Honda Accord. It's already there, shaving dollars off your premium. These are the savings that so many people leave on the table, simply because they don't know to ask for them. Experian asks for you automatically for every single carrier. It's finding money you didn't even know you were losing. Next, you'll see the payment options. This is critically important. Most people just default to a monthly payment plan, but many carriers offer a significant discount, sometimes as much as 5 to 10%, if you pay for your 6-month or annual policy in full. The Experian tool lays this out clearly. You can see the monthly cost versus the pay-in-full cost, side by side. You can instantly calculate if the upfront payment is worth the long-term savings. Again, it's about giving you total control and total transparency. But what about the company itself? A low price from an unreliable insurer is a terrible deal. Alongside each quote, you have access to information about the carrier. You can see customer satisfaction scores and financial strength ratings from independent agencies like J.D. Power and AM Best. A company's financial strength rating tells you about their ability to actually pay out claims if a major disaster happens. A cheap policy from a company with a shaky rating could mean a nightmare of unpaid bills and legal battles down the road. This tool gives you the data to balance costs with confidence, ensuring you're not just buying a policy, you're buying peace of mind from a stable, reputable partner. Now look at the top of the page. You'll see powerful sorting and filtering tools. The default view might be sorted by the lowest price, but you're not locked into that. With a single click, you can resort the entire list. Want to see the highest rated carriers first, regardless of price? Click Sort by Carrier Rating. Want to see which companies offer the biggest pay-in-full discount? There's a filter for that. You are the pilot of this dashboard. You can slice and dice the data in any way that makes sense for your personal priorities. Think about what this means. Let's imagine a driver, we'll call him David. He's a 42-year-old architect in Texas with a clean driving record. He's been with his insurer for 15 years, and his rates just keep creeping up. He assumes it's just inflation. He spends 10 minutes on the Experian tool. He clicks Compare Quotes. He sees his loyal 15-year insurer on the list, and they're the fourth most expensive option. 3 other A-rated, nationally recognized companies are offering him the exact same coverage for over $600 less per year. $600. That's a new set of tires. That's a weekend getaway with his wife. That's a significant chunk of his daughter's college savings fund. For David, this screen isn't just a list of quotes. It's a financial revelation. It's the moment he realizes that loyalty in the insurance world is often a one-way street. And the only way to get a fair deal is to force the market to compete. You might be thinking, are these quotes real? Is there a catch? The answer is simple. These are real, bindable quotes, generated directly by the insurance carrier's own systems. Experian is the technological bridge that connects you to them. There is no middleman marking up the price. There is no bait and switch. The price you see on the screen is the price you will pay, based on the information you've provided. You've gone from a state of total uncertainty, paying a bill every month without knowing if it's fair, to a state of absolute clarity and control. You now know your exact market value as an insurance customer. The power has shifted from them to you. You're now looking at a screen full of possibilities, a dozen different paths for your financial future. Each line item represents a different company, a different price, but the same core protection you designed. The choice is yours. But this is also where the most critical mistakes are made. Choosing is more than just picking the lowest number. One of these options might look perfect, but it could be a trap. The best deal isn't always the cheapest one, and the most expensive one isn't always the best. You're staring at the data, but now you need the wisdom to interpret it. So let's decode it. The first number you see, that big, bold monthly premium, is the siren's call. It's designed to lure you in. A low number feels like a win, a victory in the war against monthly bills. But in the world of insurance, the lowest price is often a mask for the highest risk. To understand why, you have to look past that first number and dissect the policy itself. Think of it like buying a house. You wouldn't just look at the price tag. You'd want to know the square footage, the number of bedrooms, the condition of the roof. An insurance policy is the same. The premium is the price, but the coverages, limits, and deductibles are the floor plan, and some of them have a leaky roof. Let's walk through a real-world scenario. You've used the Experian tool and you have two quotes in front of you. Quote A is from a company we'll call Barebones Auto, and it's an incredible $60 a month. Quote B is from Fortress Insurance, and it's $95 a month. The temptation is overwhelming. You could save $35 a month, that's $420 a year. That's a new set of tires, a weekend trip, a serious pile of groceries. You're about to click on Barebones Auto, but you pause. You decide to look deeper to compare the floor plans. You see that Barebones Auto's $60 premium gets you the state minimum liability coverage. It also comes with a $2,000 deductible for collision. Fortress Insurance, on the other hand, offers liability coverage that's 4 times the state minimum and has a much more manageable $500 deductible. Now let's play out the tape. 2 months later, you're pulling out of a parking spot. You're distracted for a split second, and you bump into a brand new SUV. It doesn't seem that bad, just a crunch. But the other driver gets out, and you see the damage. The plastic bumper is cracked, a fancy LED taillight is shattered, and one of the parking sensors embedded in the bumper is crushed. You exchange information and go on your way. A week later, you get the call. The repair estimate for the SUV is $8,000. Your state's minimum for property damage is only $5,000. With your Barebones policy, your insurance pays out that $5,000 max. The remaining $3,000? That's your problem. The other driver's insurance company will come after you personally for that money. On top of that, your own car has $3,000 worth of damage. To get it fixed, you have to pay your $2,000 deductible out of pocket first. So your cheap $60 a month policy has just resulted in a $5,000 bill. $3,000 for the other car, $2,000 for your deductible. That $420 you saved for the year just got vaporized 12 times over. Now let's rewind. What if you had chosen the Fortress Insurance policy for $95 a month? In the exact same accident, the $8,000 in damage to the other car is completely covered, because your property damage limit was much higher. To fix your own car, you pay your manageable $500 deductible. Your total out-of-pocket cost is just $500. By spending an extra $35 a month, you just saved yourself $4,500 in a massive headache. This is the core lesson of comparing insurance. Price is what you pay, but value is what you get. To find that value, you need to understand the language of the policy. The Experian tool lays it all out for you side by side. So let's translate the key terms. First up is liability coverage. This is the big one. This is the coverage that protects you from financial ruin. It's not for you. It's for the people you might accidentally harm. It's broken into 2 parts: bodily injury and property damage. You'll see it written as 3 numbers, like 25/50/25. That means the policy will pay up to $25,000 for one person's medical bills, a maximum of $50,000 for all medical bills in a single accident, and up to $25,000 to repair or replace property you damage, like someone else's car, or a fence, or a storefront. State minimums are often dangerously low. In an era where new cars regularly cost $40,000 and a single night in the hospital can exceed $25,000, the state minimum is a recipe for disaster. This is your don't lose your house coverage, and it's no place to skimp. Next are collision and comprehensive. These are the coverages that fix your car. Collision is straightforward. It pays for repairs if you collide with another object, be it a car, a pole, or a guardrail. Comprehensive is for almost everything else. Think of it as the chaos of the universe coverage. It's for theft, vandalism, fire, hail damage that makes your roof look like a golf ball, or a deer that decides to test its immortality against your front grille. For both of these, the key variable you control is the deductible. The deductible is the amount you agree to pay out of pocket before the insurance company pays a dime. A higher deductible means a lower monthly premium, but it also means more financial pain if you have to make a claim. A lower deductible is safer, but you'll pay a bit more each month for that peace of mind. Then there's uninsured or underinsured motorist coverage, or UM/UIM. This might be the most critically underrated protection you can buy. Statistics show that roughly 1 in every 8 drivers on the road in the US has no insurance at all. 1 in 8. This coverage protects you from them. If one of those drivers hits you and you're injured, their lack of insurance becomes your problem. Your UM/UIM coverage steps in and acts like the insurance they should have had, covering your medical bills and, in some cases, lost wages. It's a shield against the irresponsibility of others. Finally, you'll often see medical payments or MedPay and personal injury protection or PIP. Think of these as health insurance specifically for a car crash. They help pay for medical expenses for you and your passengers, regardless of who was at fault. This can be incredibly valuable for covering health insurance deductibles, co-pays, or ambulance rides immediately after an accident, without waiting for fault to be determined. Now let's bring it back to the Experian tool. Its power isn't just in gathering quotes. Its real genius is in how it organizes this information. It takes these complex, jargon-filled policies from a dozen different carriers and translates them into a clear, apples-to-apples comparison grid. You aren't just looking at a list of prices. You're looking at a dashboard. You can see instantly that quote A's low price is tied to a sky-high $2,000 deductible and state minimum liability. You can see that quote C, which is the most expensive, includes extras you might not need like custom equipment coverage. And you can see that quote B, the one from Fortress Insurance, hits that sweet spot of robust protection for a reasonable price. The tool allows you to stop guessing and start strategizing. You can filter the results, telling it to only show you plans with at least a $500 deductible and liability limits of $100/$300/$100. Suddenly the game changes. You're no longer being tempted by the cheapest possible price. You are now comparing the market price for the exact level of protection you've decided you need. You're in control. You're not just a shopper anymore. You are the architect of your own financial safety net. You now understand the anatomy of an insurance policy. You can dissect any quote and see exactly what you're paying for, separating the true bargains from the dangerous traps. But this brings up the most important question of all. What's the right amount of coverage for you? How much is too much and how little is too little? It's not a one-size-fits-all answer. The right policy for a teenager driving a 15-year-old sedan is completely different from the right policy for a commuter with a brand new electric vehicle. So how do you tailor these options to your specific car, your commute, your assets, and your life? The answer lies in the data. Not just any data, but your specific personal data organized and presented in a way that insurance carriers can understand and compete for. Experian's tool acts as your personal translator, taking the story of your life on the road and converting it into the language of risk, discounts, and premiums. It all starts by building what's called a driver profile. Think of it as a digital blueprint of your driving life, and the first cornerstone of that blueprint is, of course, your vehicle. When you first begin, the system will ask for your car's information. You can often just plug in the year, make, and model. But for the most accurate quotes, you'll want to use your VIN, the vehicle identification number. Why is this so important? Because a 2022 Honda Accord isn't just a 2022 Honda Accord. It could be an LX, a Sport, a Hybrid, an EXL, or a Touring model. Each of these trim levels has different features, a different sticker price, and crucially different safety equipment. The VIN is the key that unlocks that exact information. It tells the system if your car has anti-lock brakes, electronic stability control, a full suite of airbags, or advanced driver assist features like lane keeping assist and automatic emergency braking. Every one of those safety features is a potential discount. To an insurer, a car that can help prevent an accident or reduce the severity of one is a better risk. By providing the VIN, you ensure you're getting credit for every single safety feature your car's manufacturer installed. You're not leaving money on the table by letting an insurer guess based on a generic model name. The tool also asks about anti-theft devices. Do you have a passive alarm that arms itself automatically? Or an active tracking system like LoJack? These are more discounts waiting to be claimed because they reduce the risk of a total loss due to theft. The type of car itself is a massive factor. A powerful two-door sports car has a statistically higher likelihood of being in a high-speed accident than a 7-seater minivan. Repair costs also vary wildly. The bumper on a luxury German sedan can cost 10 times more to replace than the bumper on a domestic economy car. The system takes all of this into account: the cost of parts, the complexity of repairs, safety ratings from crash tests, and the vehicle's theft statistics, to build a precise risk profile for the car itself. This is the foundational layer. But a car doesn't drive itself. So the next and arguably most important layer is you, the driver. This is where the process gets a bit more personal, and it's where many people wonder why certain questions are being asked. The tool will ask for your name, address, date of birth, and driver's license number. Let's break down the why behind each. Your address is critical. It determines your garaging location. Insurance rates are priced down to the zip code level. A quiet, suburban neighborhood with low traffic and low crime rates represents a lower risk than a dense urban center with high rates of accidents and vehicle theft. It's not a judgment on you. It's a statistical reality of the environment where your car spends most of its time. Your date of birth, of course, determines your age. This is one of the biggest rating factors in insurance. Decades of data show that very young, inexperienced drivers have the highest accident rates. As drivers gain experience through their 20s, rates typically start to fall, often leveling out through middle age before sometimes ticking up again for very senior drivers. Again, it's not personal. It's purely statistical. The system will also ask about your marital status. This one often surprises people, but statistically, married individuals file fewer claims than single individuals. Insurers see this as an indicator of a more stable, risk-averse lifestyle, and it often translates into a significant discount. Then comes your driving history. The tool will ask about any accidents or violations within the last 3 to 5 years. This is your chance to be honest because the insurance companies are going to run your driving record anyway. A clean record is your single most powerful asset in getting a low rate. It tells carriers that you are a responsible, low-risk client. If you do have a minor speeding ticket or a fender bender from a few years ago, the tool allows you to input that, giving you a more realistic preview of your quotes. It's better to know up front than to get a low initial quote, only to have it skyrocket after the company pulls your official record. The system will also ask about your education level and occupation. While it might seem unrelated, some carriers offer discounts for certain professions that are statistically shown to be lower risk. Engineers, scientists, and teachers, for example, often qualify for small discounts with some insurers. Likewise, a college degree can sometimes lead to a slightly lower premium. Every piece of information you provide helps the system hunt for every possible discount you qualify for. It's like having an expert sift through the fine print of dozens of policy handbooks on your behalf. But what if you're not the only one driving the car? The tool allows you to add other drivers in your household. This is crucial for accuracy. If you have a spouse or a teenager who will be driving the vehicle, they must be on the policy. You'll enter their information just as you did for yourself. The system will then factor in their age, driving record, and experience to calculate a blended risk for the household. It's important to be transparent here. Trying to hide a new teen driver from your policy might save money in the short term, but it could lead to a claim being denied down the road, costing you exponentially more. So we have the car, its features, its risks, its repair costs. We have the driver or drivers, their age, their location, their history. The final piece of the puzzle is connecting the two. It's about usage. How, when, and where do you actually use your vehicle? This is the third layer of your profile. The first question is about the primary use of the car. Is it for commuting to work or school? Is it for business use, like visiting clients or making deliveries? Or is it primarily for pleasure, like running errands and weekend trips? The distinction is vital. A car used for a daily 50-mile round-trip commute in rush hour traffic is on the road more often, and in more dangerous conditions, than a car that's only used on weekends. This higher exposure to risk means a higher premium. If your situation has changed, maybe you now work from home, switching your primary use from commute to pleasure can result in an immediate and significant drop in your rate. This ties directly into the next question: your estimated annual mileage. Be realistic here. You can check your car's past service records, or just note the odometer reading and check it again in a month to get a good estimate. The national average is around 12,000 to 15,000 miles per year. If you drive significantly less than that, you represent a lower risk and you could qualify for a low mileage discount. Conversely, if you're a road warrior putting 25,000 miles a year on your car, your premium will reflect that increased time on the road. The Experian tool allows you to play with these numbers to see how they impact your potential rates, giving you a clear picture of how your driving habits translate into dollars and cents. Finally, the system will ask about your current insurance status. Do you have continuous coverage? A lapse in insurance coverage, even for a few days, is a major red flag for insurers. It suggests a higher risk profile, and you'll almost always pay more if you've had a recent lapse. By indicating you have continuous coverage, you're signaling that you're a responsible policyholder, which helps you secure the best rates. And there you have it. You've built a comprehensive, detailed, and accurate profile of your car, yourself, and your driving habits. You haven't just filled out a form. You've constructed a powerful argument for why you deserve the best possible rate. Each data point, from your car's VIN to your annual mileage, has been used to create a precise digital persona that Experian can now take to the marketplace. The groundwork is laid. The system has everything it needs. Now the magic is about to happen. The algorithms are crunching the numbers, securely and anonymously pinging the systems of dozens of top-tier insurance carriers, all competing for your business. But what comes back isn't just a list of prices. It's a roadmap to savings, and in the next part we're going to learn exactly how to read it. And roadmap is the perfect word, because what you're looking at isn't a spreadsheet. It's not just a list of numbers. It's a custom-built dashboard showing you the entire landscape of your auto insurance options, laid out with crystal clarity. For the first time, you're not guessing. You're not calling a dozen different agents, repeating the same information over and over, getting worn down by sales pitches. You're in the command center. The first thing that hits you is the sheer range of prices. It's often staggering. On one side of your screen, you might see a quote for, say, $2,000 a year. And right below it, from another well-known, reputable carrier, a quote for $1,200. Same driver, same car, same driving history, same requested coverages. The only difference is the carrier. That $800 gap isn't a mistake. It's the profit margin, the risk calculation, the marketing budget, and the operational inefficiencies of one company compared to another. It's the "we don't really want your business price" versus the "we are fighting for your business price." And until this moment, you likely had no idea that gap even existed, let alone how massive it could be. This initial shock is powerful. It's the moment you realize the insurance game is, in fact, a game. And with this tool, you've just been handed the official rulebook and a couple of cheat codes. Let's zoom in and dissect one of these quotes, because the price is just the headline. The real story is in the details. Each quote is presented like a standardized nutrition label. The carrier's name is right at the top, clear as day. Next to it, you'll see the two numbers that matter most to your wallet: the total policy premium, usually for a 6-month or 12-month term, and the estimated monthly payment. The tool does the math for you, breaking it down into a manageable, understandable monthly figure. This immediately lets you compare quotes based on how they'll impact your actual monthly budget. But here's where we move beyond simple price shopping. Below the cost, you'll find the heart of the policy: the coverages. This is what you are actually buying. It's the promise the insurance company is making to you. Experian's tool demystifies this, breaking it down line by line. First, you'll see liability coverage. This is the one that's legally required in almost every state. It doesn't cover your car or your injuries. It covers the damage you might cause to other people and their property. It's typically shown as a series of 3 numbers, like 50/100/50. This looks like code, but it's simple once you know how to read it. The first number, 50, stands for $50,000. That's the maximum amount the insurer will pay for any single person's bodily injuries in an accident you cause. The second number, 100, is $100,000. That's the total maximum they'll pay for bodily injuries for everyone in the other car combined. The final number, 50, is $50,000 for property damage. This covers the other person's car, or maybe that mailbox or fence you might have hit. Seeing this laid out clearly allows you to instantly assess if you're comfortable with those limits. Next up, you'll see collision coverage. This is the one that pays to repair or replace your car if you're in an accident that is your fault, like rear-ending someone or hitting a pole. Right next to this line item, you'll see another critical number: your deductible. The deductible is the amount of money you have to pay out of pocket before the insurance company starts paying. A $1,000 deductible means you cover the first $1,000 of repairs, and they cover the rest. A $500 deductible means you only pay the first $500. This is a strategic choice. A higher deductible means you're taking on more risk yourself, so the insurance company rewards you with a lower premium. A lower deductible is safer, but you'll pay more for that peace of mind every month. The Experian tool shows you exactly what deductible is being quoted in each offer. Then there's comprehensive coverage. Think of this as the life happens coverage. It's for damage to your car that isn't from a collision. A tree branch falls on your roof during a storm. Your car is stolen. A deer decides to meet your front bumper at 60 miles per hour. Hail damage, vandalism, all of that is typically covered under comprehensive. And just like collision, it will have its own deductible, which you'll see clearly listed. But it doesn't stop there. The tool also breaks down other vital, often overlooked coverages. You'll see uninsured or underinsured motorist protection. This is profoundly important. It protects you if you're hit by someone who has no insurance or not enough insurance to cover your medical bills and car repairs. It's basically insurance against irresponsible people. You'll see the limits for this coverage listed just as clearly as your main liability. You might also see medical payments coverage or personal injury protection, depending on your state. This helps pay for medical expenses for you and your passengers after an accident, regardless of who was at fault. It's another layer of financial protection, and the tool will show you exactly how much coverage is included in the quoted price. Now, here is the absolute genius of the platform. Every single quote from every single carrier is displayed in this exact same, easy-to-read format. It's a forced apples-to-apples comparison. Carrier A can't hide their low liability limits behind confusing marketing jargon. Carrier B can't trick you with a low price that has a ridiculously high $3,000 deductible. It's all laid bare. You can scan down the page and see instantly. Okay, Progressive, Geico, and Allstate are all quoting me for the exact same 100/300/100 liability, the same $500 collision deductible, and the same comprehensive. The power this gives you is immense. It strips away the salesmanship and boils it down to the pure data. The confusion, the doubt, the nagging feeling that you're not getting the whole story, it evaporates. Furthermore, the price you see already has the discounts you qualify for baked in. Remember all those questions you answered at the beginning? About your driving record, your education, your mileage, whether you have an anti-theft device. The tool took all of that and automatically applied the relevant discounts to each carrier's quote. You're not just seeing a base price. You're seeing a personalized price that reflects your specific, individual profile. You're seeing your good driving habits, your safe car, your life choices, translated directly into dollar savings. So you're looking at this roadmap. You see the full price. You see the monthly payment. You understand the liability limits. You know your deductibles for collision and comprehensive. You've confirmed you have protection against uninsured drivers. You are, in this moment, more informed than 99% of drivers on the road. You've moved from a position of weakness, of hoping you get a fair price, to a position of absolute power, where dozens of companies are openly bidding for your business in a transparent marketplace. You can see the landscape. You understand the language of the map. But what if you want to change the destination? What if that $500 deductible feels a little risky, and you'd rather see the price for a $250 one? What if you just got a raise and you want to bump up your liability coverage for more protection? You're not just looking at a static report. You're looking at a dynamic, interactive workbench. You have the ability to fine-tune these quotes in real time. And in the next part, we're going to pick up the tools and show you how to customize these options, turning a great quote into your perfect, tailor-made policy. So let's get our hands dirty. Welcome to your personal insurance command center. This screen, with its columns of carriers and rows of numbers, is not a final offer. It's the starting block. It's a living document, and you are the editor. Every single number you see is a variable, a lever you can pull, a dial you can turn. And as you do, you'll see the entire landscape of quotes shift and reform in real time. This is where you go from being a price taker to a deal maker. First, let's focus on the absolute bedrock of any auto insurance policy: Liability coverage. This isn't for you. It's for everyone else. It's the coverage that pays for injuries and property damage you might cause to other people in an accident. It's typically shown as 3 numbers, something like 25/50/25. Sounds like code, but it's simple. The first number is the maximum. In thousands, the policy will pay for bodily injury to one person. The second is the max it will pay for bodily injury for the entire accident. And the third is the max it will pay for property damage. Now, most states have a legal minimum, and frankly, it's dangerously low. Let's say your state minimum is 25/50/25. You cause an accident that injures 2 people, and you total a brand new $50,000 SUV. Your policy will pay $25,000 to each injured person, and $25,000 for the SUV. But the medical bills are higher, and the car is worth double that. Guess who's on the hook for the rest? You are. They can go after your savings, your investments, even your future wages. This is how a simple fender bender leads to financial ruin. So watch this. Right here in the Experian tool, we see a drop-down or a slider for liability limits. Our initial quotes were based on a modest, let's say 50/100/50 coverage. Now, I'm going to click this and increase it to 100/300/100. A much safer level of protection for the average person. Look at the premiums. Did you see that? Every single quote adjusted instantly. The Allstate quote went up by $12 a month. The Progressive quote, however, only increased by $9. And the Geico quote jumped by $14. This right here is invaluable information. It tells you not just who is cheapest overall, but who offers the best value for better coverage. Some companies penalize you heavily for wanting more protection. Others reward it. You would never know this without seeing the numbers dance in real time. You're no longer guessing. You're making a data-driven decision about your financial security. Okay, let's put liability aside. Now let's talk about your car. That's where collision and comprehensive coverage come in. Think of it this way: collision covers damage to your car from, well, a collision, hitting another car, a pole, a guardrail. If you're at fault, this is the coverage that fixes your ride. Comprehensive covers almost everything else. Theft, vandalism, a tree branch falling on your hood, hitting a deer, hail damage, fire. It's the life happens coverage. For both of these, the main lever you control is the deductible. The deductible is simply the amount of money you agree to pay out of pocket for a claim before the insurance company starts paying. It's your share of the cost. A common deductible is $500, but they can range from $0 to $2,500 or more. And here's the golden rule. A higher deductible means a lower monthly premium. Why? Because you're taking on more of the initial risk. The insurance company knows they won't have to pay out for smaller claims, and that you have more skin in the game, so they give you a better rate. Watch the screen again. Our current quotes are based on a $500 deductible for both collision and comprehensive. See this slider? I'm going to grab it and drag the collision deductible up to $1,000. Boom! The numbers just dropped across the board. That Allstate quote just fell by $18 a month. The Progressive quote is down by $22. We just saved over $200 a year with a single click. But is it the right move for you? That's the critical question only you can answer. Do you have $1,000 readily available in an emergency fund? If you do, then paying a lower premium every month might be a brilliant financial move. But if a $1,000 surprise bill would be a catastrophe, then paying a bit more each month for the peace of mind of a lower deductible is the smarter play. The tool doesn't make the decision for you. It gives you the clarity and the immediate feedback you need to make the decision that fits your life and your risk tolerance perfectly. You can toggle it back and forth from $500 to $1,000 to $250, and instantly see the financial trade-off. Now let's move into the options that can be the real lifesavers. Let's start with uninsured or underinsured motorist coverage. Pay close attention to this one. Statistics show that roughly 1 in 8 drivers in the United States is on the road with zero insurance. 1 in 8. That means every time you're at a busy intersection, there's a very real chance one of the cars around you has no way to pay for the damage they might cause. If an uninsured driver hits you, and it's their fault, their lack of insurance suddenly becomes your massive problem. Who pays for your medical bills? Who pays to repair your car? Without this specific coverage, the answer is you do. Uninsured motorist coverage steps in and acts like the other driver's insurance. It protects you from the irresponsibility of others. As we select this option on the dashboard, we see the premiums tick up, but not by much. For maybe $10 or $15 extra a month, You're buying a shield against a potentially catastrophic financial hit. You're insuring yourself against someone else's bad decision. In my book, it's one of the most valuable pieces of the entire policy. Next up, let's look at medical payments or MedPay. Some states, especially no-fault states, have a variation called Personal Injury Protection, or PIP. This is beautifully simple. It helps pay for medical expenses for you and your passengers after an accident, regardless of who is at fault. Why is this important? Because fault can take weeks or months to determine. While the insurance companies are investigating and arguing, hospitals and doctors want to be paid. MedPay provides immediate funds for things like health insurance deductibles, copays, or ambulance rides without the wait. It's a relatively inexpensive add-on that can prevent a ton of stress and financial pressure right after a traumatic event. And finally, let's look at the convenience coverages that can feel like absolute luxuries when you need them. Rental reimbursement and roadside assistance. Look, nobody plans to have their car in the shop for 10 days. But when it happens, how do you get to work? How do you get your kids to school? A rental car can easily cost $50, $60, $70 a day. That's a $500 bill you weren't expecting. For what usually amounts to the price of a cup of coffee each month, rental reimbursement coverage handles that bill for you. Same with roadside assistance. A flat tire on a dark road, a dead battery in a freezing parking lot, locking your keys in the car. These things are frustrating, but they can also be scary and expensive. A tow can cost hundreds of dollars. By adding this coverage, again for just a few dollars a month, you turn a potential crisis into a simple phone call. As we click these options on and off in the Experian tool, you can see exactly how much these peace-of-mind coverages cost with each carrier. You might find that for Carrier A, adding them is an extra $15, but for Carrier B, it's only an extra $6. That's the kind of granular detail that saves you real money. So you see what we've done here? We haven't just looked at a list of prices. We've conducted a symphony. We've moved from the state-mandated minimums to a robust shield of liability. We've balanced our personal risk tolerance with our monthly budget by adjusting deductibles. We've added crucial protections against uninsured drivers and medical bills. We've layered on conveniences that eliminate major life headaches. We've taken the generic one-size-fits-all quotes and meticulously sculpted them, click by click, into a policy that is uniquely, perfectly ours. And with each adjustment, the Experian tool has served as our transparent financial advisor, showing us the immediate consequences of every choice across multiple companies. We now have a set of truly comparable, fully customized quotes. We've built the ideal policy on paper, but an insurance policy is only as good as the company that stands behind it when you actually need them. That's the part nobody talks about. The part that can turn a minor fender bender into a months-long nightmare, or a major accident into financial ruin. The price on the screen is just a number. The promise behind that number is everything. Think about it. You're not just buying a document that lets you legally drive your car. You are paying a company a monthly fee to have your back, to make you whole again when something goes wrong. You are transferring your risk to them. So the single most important question you should ask isn't, is this cheap? It's, can I trust this company to hold up their end of the bargain when I'm standing on the side of the road, watching smoke pour from my engine? This is where most comparison shoppers make a critical and often costly mistake. They sort by price, low to high, click the cheapest option and call it a day. They save maybe $12 a month, but they have no idea if they just signed up with a company notorious for denying claims, for lowballing repair estimates, or for having customer service agents that are impossible to reach. Experian understands this. They know that a true comparison isn't just about the premium. It's about the total value and the peace of mind that comes with it. That's why, when you're looking at your list of quotes, you'll often find more than just the price. You'll find the critical data points you need to evaluate the company itself. Let's break down what you should be looking for. The 3 pillars of a trustworthy insurance carrier: financial stability, claims satisfaction, and customer service. First, and arguably the most fundamental, is financial stability. This sounds boring, but it's the bedrock of your policy. Financial stability answers one simple question. If a major disaster strikes, a hurricane, a massive hailstorm, a catastrophic multi-car pileup, does this company have the cash reserves to pay out all the claims, including yours? You want a company that is a financial fortress. The gold standard for measuring this is a rating from an agency like AM Best. They've been analyzing the financial health of insurance companies for over a century. They issue letter grades just like in school, from A++ all the way down to D. Think of it like this. You wouldn't keep your life savings in a shaky, brand new bank no one's ever heard of just because they offer a slightly higher interest rate. You choose a stable, well-established institution because you know your money is safe. Insurance is the same. A company with an A rating or higher from AM Best has proven they have a superior ability to meet their ongoing insurance obligations. They can weather the storm. A company with a B or C rating might offer a temptingly low premium, but they carry a higher risk of not being able to pay when you need them most. The Experian platform often provides or links to these quality indicators, allowing you to filter out the financial lightweights from the heavyweights. Never, ever sacrifice financial stability for a lower price. It's the ultimate penny-wise, pound-foolish decision. The second pillar, and the one you'll feel most acutely after an incident, is claim satisfaction. This is the moment of truth. This is where the promises in the policy document become a real-world experience. How does the company treat you when you're at your most vulnerable? Are they empathetic and efficient? Or are they adversarial and slow? Do they send an adjuster out quickly? Do they approve repairs with high-quality, original manufacturer parts? Or do they push for cheaper, aftermarket options? Is the settlement they offer fair and fast? These questions are the difference between getting your car fixed and back on the road in a week versus spending 6 weeks fighting over every line item of a repair bill. To gauge this, we look to organizations like J.D. Power. They conduct massive, nationwide surveys of real customers who have recently gone through the claims process. They ask them about every step, from the first notice of loss to the final settlement. Based on this feedback, they create annual rankings for overall claims satisfaction. A company that consistently ranks at the top of J.D. Power's list has a proven track record of treating its customers well when it matters most. When you're looking at your quotes, if you see one company is $10 cheaper but has a 2-star claims rating, while another is slightly more expensive but has a 5-star rating, that extra $10 a month is buying you an infinitely better experience should you ever need to use the service you're paying for. It's the best insurance you can buy for your insurance policy. The third and final pillar is overall customer service and complaint history. This covers everything outside of a specific claim. How easy is it to get a human on the phone to ask a question about your bill? Is their website and mobile app easy to use? When you need to add a new driver or change your coverage, is it a simple process or an administrative nightmare? While J.D. Power also covers this, another incredibly powerful tool is the National Association of Insurance Commissioners, or NAIC, Complaint Index. This is raw, unfiltered data. The NAIC is a regulatory body, and they track every official complaint filed by consumers against insurance companies across the country. They then create a simple, brilliant metric, the complaint ratio. A ratio of 1.0 is the national average. If a company has a complaint ratio of 2.0, it means they receive twice as many complaints as you'd expect for a company of their size. If their ratio is 0.5, they get half as many complaints as the average. This is your ultimate red flag detector. A company might have slick commercials and a friendly sales pitch, but a high NAIC complaint ratio tells you the real story from real, dissatisfied customers. You should actively avoid companies with a ratio significantly above 1.0. It's a clear signal that there's a systemic problem with how they treat their policyholders. So now, let's bring this all back to your screen. As you look at the customized quotes Experian has gathered for you, your entire mindset needs to shift. You are no longer just a price shopper. You are a value investigator. Don't just look at the column with the dollar signs. Look for the columns or icons that indicate financial ratings, customer satisfaction scores, and company reputation. Here's the new process. Instead of sorting by price, you first scan for quality. Mentally, or if the tool allows, physically filter out any company that doesn't meet your minimum quality standards. Any carrier with a poor financial rating? Gone. Any company with a historically low claim satisfaction score? Gone. Any provider with a sky-high complaint ratio? See you later. What you're left with is a curated list of high-quality, trustworthy companies that you can feel confident doing business with. Now, and only now, do you compare the prices. From this pre-vetted list, you can now confidently choose the one that offers the best premium for the comprehensive, customized policy you built in the last step. You might find that the cheapest company on your original unfiltered list was filtered out, and that's a victory. You've just dodged a potential bullet. You might find that the best option is the second or third cheapest, costing you a few extra dollars a month in exchange for the near certainty of a smooth, fair process if you ever have to make a call. This is the profound difference between simply finding cheap insurance and intelligently shopping for the best value insurance. You've used the power of data and comparison not just to save money, but to make a smarter, safer, and more informed decision. You've combined the best price with the best coverage from the best company for you. You've built the perfect automotive safety net. You've done the research, you've weighed the options, and you've made your choice. You're holding a winning ticket. But what does that winning ticket actually get you? It's not just a piece of paper or a digital file. It's a quiet confidence that settles in the back of your mind every time you get behind the wheel. It's the absence of a nagging question. Am I covered for this? It's the freedom to focus on the road, on the music, on the conversation with your kids in the back seat, instead of on the financial what-ifs. Imagine this. It's 6 months from now. You're pulling out of a tight parking spot at the grocery store. It's raining, the windows are a little foggy, and you just don't see the concrete pillar. There's that gut-wrenching crunch. Your heart sinks. Your first thought isn't panic. It isn't, how am I going to afford this? It isn't, my insurance company is going to be a nightmare to deal with. No, your first thought is, okay, this happened. Let me pull up my policy. You remember the choice you made. You remember you didn't just pick the cheapest option. You picked the one with the right collision deductible. You picked the one with rental reimbursement because you need your car for work. You remember looking at the company's claim satisfaction score and feeling good about it. So instead of a spiral of anxiety, you have a checklist. You take a few pictures. You open your insurer's app. You file the claim right there in the parking lot. Within an hour, you have a claim number and a text from an adjuster. By the end of the day, you know which body shop to go to, and your rental car is arranged. The whole ordeal, while annoying, is just managed. It's a bump in the road, not a financial car crash. That is the difference. That is what you bought. You didn't just buy an insurance policy. You bought a system. You bought a pre-planned solution to a future problem. And you did it without overpaying because you used a tool that laid all your options out on the table. Now, here's the secret that separates the truly savvy from everyone else. That winning ticket? It has an expiration date. Not on the policy itself, but on its value to you. Your life isn't static, so why would your insurance needs be? The policy that was perfect for you today might be just okay a year from now, and a terrible deal in 2 years. This is where so many people drop the ball. They do the hard work once, find a great deal, and then they coast. They set it to auto-renew and don't think about it again for 5, maybe 10 years. All the while, their rate is creeping up little by little. $100 one year, $150 the next. They don't notice it because it's gradual. But over a decade, they've left thousands of dollars on the table. Think of your auto insurance like an annual financial checkup. Just like you might review your 401k or your credit score, you need to put your insurance under the microscope at least once a year, especially around renewal time. Why? Because the entire landscape is constantly shifting. Maybe you moved. Even a move of a few miles to a different zip code can have a massive impact on your rates. Maybe you got a new job and your commute went from 30 miles a day to 5, or you work from home now. That's a huge change in risk that your insurer needs to know about, and it should lower your premium. Maybe you bought a new car with advanced safety features like automatic emergency braking and lane keep assist. Those are discounts waiting to be claimed. Or maybe, on the flip side, you got a speeding ticket. One insurer might jack up your rates by 40%, while another might be far more forgiving. You won't know unless you look. But here's the biggest reason, and it has nothing to do with you. The insurance companies themselves are constantly changing their math. They are always reevaluating risk, targeting different types of drivers, and competing for market share in different states. The company that gave you the best rate last year might have decided they have too many customers just like you in your area, so they're raising prices. Meanwhile, a competitor is trying to break into your market and is offering aggressive, low rates to win new business. The only way to know if you're catching that wave is to paddle out and check, to compare. This isn't about being disloyal to your insurance company. This is about being loyal to your own wallet. It's about being a smart consumer. And this is the true power of the Experian tool. It's not just for finding your first great policy. It's for making sure you always have a great policy. It turns that daunting once-a-decade chore into a simple 5-minute annual review. You already have an account. Your information is saved. You can just log in, update any changes from the past year, and instantly see if the grass is greener somewhere else. It gamifies the process. Can I beat last year's price? Can I get better coverage for the same money? It puts you permanently in the driver's seat. Now, I know there are a couple of lingering fears that might be holding you back. Let's tackle them head-on. Fear number 1. Will shopping for insurance hurt my credit score? This is a big one because we've all been trained to protect our credit. Here's the answer. Absolutely not. When you use a comparison tool like Experian or get quotes directly, insurers do what's called a soft pull on your credit. It's a background check, not a loan application. It has zero impact on your credit score. You can get 1 quote or 50 quotes, and your score won't budge a single point. So shop with confidence. Fear number 2. Switching companies is a huge hassle. It really isn't. It used to be, but the process today is incredibly streamlined. You don't even have to make that awkward breakup call to your old insurer. Once you've chosen and paid for your new policy, your new insurance company will handle most of the transition. They'll provide you with your new ID cards instantly. All you have to do is contact your old company to cancel the old policy and make sure you get a refund for any unused premium you've paid. It's a 10-minute task that can save you hundreds or even thousands of dollars. Is that worth it? Every single time. What we've been talking about this whole time is more than just a piece of software. It's a fundamental shift in your relationship with a major monthly expense. For decades, the auto insurance industry has operated from a position of power. Their pricing was a black box. Their language was confusing. The process of comparison was so deliberately difficult that most people just gave up and paid whatever they were told to pay. Tools like Experian's auto insurance comparison shatter that black box. They create transparency. They turn a monologue from the company into a dialogue with the customer. They take the power out of the hands of the actuaries and algorithms and place it directly into yours. This isn't just about saving money. It's about control. It's about understanding. It's about making a confident, informed decision for yourself and your family. It's about transforming an obligation into an opportunity. You work hard for your money. Every dollar in your paycheck represents a piece of your time, your effort, your life. You owe it to yourself to be just as smart about how you spend that money as you are about how you earn it. And letting hundreds of dollars slip away every year on an overpriced insurance policy is like working for free for a week. So here's your call to action. It's not just to watch another video. It's to do something. Right now, while this is fresh in your mind, open a new tab. Go to Experian. Take the 5 minutes it requires to walk through the process. There is no commitment. There is no cost. There is no impact on your credit. There is only information. There is only knowledge. There is only the possibility that you could be putting a significant amount of money back into your own pocket. Money for gas, for groceries, for a vacation, for your savings. Money that is better off with you than with a massive corporation. You have the knowledge. You have the tool. The only thing left is to take that first step. Find out what your winning ticket looks like. Claim the peace of mind that comes from knowing you're not just covered, you're covered correctly, and for the best possible price. Take control of your auto insurance and prove to yourself that you can and will make the smartest financial decisions. The power is finally in your hands. Use it.